What's going on, everybody? Welcome back to my YouTube channel. Now, on today's lesson, I'm going to show you how you can enter like a sniper. I'm going to show you how you can get into early trades and stack insane risk to reward. And obviously stop getting stocked out like a rookie. Because I want to be real with you guys. Most traders enter late, right? They get tagged into a trade and then they start crying about manipulation. But it's not manipulation. It's just that you're late into the move. So today I'm going to break down how to enter inside the range of one candle using two time frames and two patterns. This candle right here, this is all you need. Okay, what you need to understand is this, guys. A high time frame candle represents 100% of strategies. That's it. It's facts. So let's just say this is a 4-hour candle, right? Anyone trading the first 4 hours of London Open, they're all trading this exact candle. Some might be trading break and retest. Some might be going for breakouts. Some might be trading smart money concepts. And some are trading 2CDT like me. But here's the truth, okay? And here's what's not up for debate is the candle itself. Because this candle right here, this captures everything. Every single move, every single setup, every single continuation, fake out, whatever you want to call it, every single move is baked into this one candle's range. So if you master this candle, you master your trading, period. So today I'm going to show you how to break this candle down so that you can stop chasing setups and you can start entering those sniper entries like a pro. Let's get into it. So let's really understand what we mean by ranges. First of all, we have the sweet spot entry. This is typically the bottom third of the candle. We're earlier into the move. This is where we get the highest risk to reward, but it just needs a little bit more confidence and conviction to enter. And this is really where the pros load in. Then we have the value zone entry. Typically, this is within the middle third. This is where the move has already confirmed. We still get solid risk to reward, but usually less risk, less reward. And this is where most traders enter here. And then we have the chaser entry, which is typically the top third. This is later into the move, lower risk to reward, and a high chance of reversals. Now, this is where most traders get stopped out. So now we understand what the ranges are. Let's take a look at a few examples on the charts. All right, guys, let's lock in. I'm about to walk you through 3 powerful examples every trader needs to see. They're simple, they're real, and they'll shift how you look at the markets. But here's the deal. You need to stay till the end because what I will show you will flip your perspective completely. Let's get into it. So we're looking at GU here on the 1-hour time frame. We keep trading simple. The last candle that you can see has closed bullish. All we anticipate is a continuation of this bullish move. Nothing more. So what we'll do here is we'll mark this off so that we know where we're at, and we'll head down to our entry time frame. We're going to use the 1-minute time frame as our example here. So here is the open of the previous candle, and here is the close of the previous candle. Remember, this candle has closed bullish. So what I'm looking for here now is a continuation of this bullish move. Now, the anatomy of a candle formation is wick first, body next. So I'm going to allow the market to create its structure. And then what I'm looking for, very simply, is for the market to create a structure that resembles a continuation of this uptrend. So as you can clearly see here, we've broken out of this consolidation. You can see the market has continued bullish. We've created a pullback and a strong bullish close. This is what we call a high-low continuation. So I'm going to mark this here so that you can see where we're entering. And then we're going to take the trade. This is a buying opportunity, so I want to enter once I get the confirmation that the bulls are in control of the market, and I want to place my stop loss below the higher low in anticipation for price to continue bullish. So this is our first entry. We're going to take the buy. We're going to place our stop loss below the higher low, and we're going to go for our target for 1 to 3 risk reward ratio. So you can see here we're risking $460 to make $1,350, and let's see what happens. A very simple trade. Now remember, the whole purpose of trading is to keep it simple and build habits that actually stick. So that means using a system that's repeatable and, more importantly, relevant to the market's actual move. So there's no fluff, there's no guesswork, just structure that speaks the market's language every single day. So this is what we call the sweet spot entry. This is the bottom third of the candle. So we're early into the move. This is where it provides highest risk to reward. Just needs a little bit more confidence and conviction to enter, and this is where the pros load in. If we take a look at the hourly time frame, you will see where we enter this trade in the bottom third. So we're now going to look at the second example. Now again, we're going to keep trading very, very simple. This current candle has closed bullish. All we're going to do is continue to anticipate a continuation of this move. Until the market tells us different, we need to stick to the plan and just continue trading in this direction. Let's mark off where this candle has opened, and then let's head down to our entry time frame. So this is our first entry, and we was able to bank here $1,350 using a risk reward ratio of 1 to 3. Let's mark off where the candle closes, which is around here. Let's get to it. We're looking for the close. Okay, just like we did before, we have the open of the candle, and here we have the close of the candle. Again, we're not going to do anything different to what we did last time. We're just going to continue to keep trading very simple, and we're going to anticipate a continuation of that previous bullish candle, which is this one here on the hourly time frame, in anticipation for the next candle to continue bullish. Let's see what happens. Now, again, we're just looking for structure that resembles an uptrend, and what we're looking for here is a higher low continuation move. So as you can see here, we have a pullback. Do we get a strong bullish close? We do. So again, just like the first example, we have a strong push phase, a higher low in anticipation of a higher high continuation. Here we have a pullback, a higher low, strong bullish candle in anticipation of a continuation. We want to take this trade again by entering. Once we've got the entry confirmation, we want to place our stop loss below the low, and we call this a higher low, and then we want to go for our target. Now that we have this set up, let's take the buy. And again, our stop loss goes below the higher low, and our TP is a 1 to 3 risk reward ratio. So here we're risking $490 to make $1,510. And from our first trade, as you can see, we have already banked $1,350 so far. Let's see what happens. So as you can see here, we've hit TP. Now let's mark where we've entered this trade so I can show the example on the higher time frame once we get there. But this is what we call a value zone entry. So this is the middle third. This is where the move has confirmed. We still get solid risk reward ratio, usually less risk, less reward, and this is where most traders enter. As you probably can see here, it wasn't as smooth as the first entry. We didn't just go straight to TP. We pushed up, we had much bigger pullbacks, we had range in markets, but we finally got there in the end. So as you can see here on the hourly time frame, the first entry was at the bottom third. So we got a much cleaner move to the upside. And our second example here, you can see we entered around the middle third, which required a lot more time to hit our TP. We had much bigger pullbacks, and we also had consolidating markets before we finally hit the TP. Finally, let's break down the third example. Again, no need to complicate this, guys. Until the market tells us otherwise, we keep trading the 2CT setup in line with the bias at the previous candle close. So simple rules, clear structure, let the market do the talking. Let's head over to the 1 minute time frame. So now we can clearly see that the previous candle has closed bullish, and in actual fact, what we needed was the third candle in this movement to be able to get this market to continue to our TP. In the second example, but here is where the candle opens, and now we're going to look for a continuation of this move to the upside. Again, we're looking for simple structure again, and we're looking for price to create a sentiment that resembles an uptrend. So here you can clearly see the market continuing to push bullish. Here we have price continuing to push higher, and now what we're looking for here is a clean sentiment that resembles an uptrend. Okay, so now you can see here we have price creating a structural low and a structural higher low. In actual fact, we need to go back one candle, which means that this is a deviation. We have a nice sentiment here where price is creating this U shape in anticipation for price to continue pushing bullish. So this is an example where we can take this trade. We can put our stop loss behind the structure, and then again, we're just going to go for a simple 1 to 3 target. Let's buy this position. We want to place our stop loss again behind the higher low, and then we want to go for our target. We've taken 2 trades so far. We've made $3,000. Here we're risking $550 to make 1,640. Let's see how this goes. And there we have a stop loss. Now let's mark where we've entered this trade and let's head over to the hourly time frame. As you can see here on this third example, guys, we have entered much later into the candle. And this is what we call the chaser entry. So this is the top third. You can clearly see we're late in the move. We got terrible risk to reward. There's a much higher chance of a reversal. And this is where most traders get stopped out. So now you've seen the three examples. You know how to approach the market with precision. But you have to remember what I told you before we jumped in. I was going to show you something that would blow your mind. If I come over to the charts and head to the 4-hour time frame, this is the same candle every trader is reacting to inside that one candle. All three types of entries, all playing out like clockwork. And this is the entire game right here. One candle, one range, three chances. And that's all you need to build strong habits and real consistency. So make sure that you keep it simple. If this training helped you guys, please smash the like button, subscribe, turn on notifications, and as I always say, continue to trust the process.